I am streaming. What's up, everyone? Today's live video, just talking about some trades I put on today. Let me just pull up my screen because I don't have all the gadgets some of the other guys do, and you know how they can see everything, or they got the multiple monitors. By the way, I used to run multiple monitors. Put this down. I used to run multiple monitors about 8 years ago. I was one of the first people to actually do that. And when they started to jump to 2 monitors, I went to 3 monitors, you know. So I was actually one of the first. And then I decided to go with a big 32-inch monitor, which was huge back then. The monitor was almost $300-400 and nobody was doing it. Everybody was still on the 2 screens and 3 screens, but I was on like the big screen, you know. So, and I actually like the big screen more than the multiple monitors, kind of doing all of that and dragging things. So anyway, let's talk about the markets. What's up, everyone? This is Dre. I was gonna say I'm Dre from EMIP-TV, but I changed that. This is Dre, and I got people mowing outside. You might hear that. Anyway, so we're looking at the SPY. This is just what's going on in the market, and I think this is a weekly chart. This is where we are. The market is down for like the first time in 8 days. The SPY. That's okay. We're kind of down, but I think it's gonna test that high. I just think it's going there. I mean, look at how it came up. Look at this consolidation right here. Then a gap up. You know, I don't know if we're gonna fill that gap. We might just push up and then come down and maybe fill that gap then. So, what's up, everyone? I got my little phone set up. So what am I trading? I put on a lot of trades today. I actually looked at my commissions this year. What is it? April. I'm already at $1,000. It might sound like not a lot depending on what you pay for, but I only pay $1 a trade. Did I put on 1,000 trades? So that's crazy. That's crazy. What am I, a mutual fund? Anyway, so 3M, man. I was checking out 3M. It's down. It's down and out. You know, here is some like long-term resistance, you know, starting from 2017. And I think it's going to bust. You know how I like to play that anticipation game, right? So instead of just buying it, thinking, you know, because you probably really just want to short it right here when it reaches that for sure. It depends how, you know, how far you think it's going to, it could be short term, it could go sideways, but there is going to be some selling pressure. So what did I do? I bought a leap. I bought a leap like 2 years out, I think. Let's see if I can go to my analyze tab. I got it right here. I bought the January 7, 20, the 17 January 20 leaps. And you can look right here. Let me pull this thing down. I don't know if y'all can understand this, but basically by January 17th next year, okay, that's what, about 7-8 months from now. Not quite a leap, but I call it a leap. If it's next year, it's a leap, in my opinion. So I bought 2 positions. If it's over 210, I make $776. You can see it over here, 118.20. But if it's below 210, or actually below 200, I lose $1,224. So over 210 makes 776. Let's look at the chart again. See where it is now? It's trading at 212. I'm already a winner. All it needs to do is stay above 212 and go higher. It can stay here. It can go down a little bit. As long as it goes up, that 776 is in the bag. And that's basically how I trade. You know, I am estimating that this thing, see, we way over here, that is going to be higher than this position right here. Should I draw it? Yeah, right there. There we go. I think it's going to be high about time we get over there. And that's how I trade. I just look at things that's kind of depressed or things that I just think is going higher, put on the position and just let it work, right? If the stock market, if you get 12% a year, because we're going to figure this out. If you get 12% a year, you're doing pretty good. You're like, oh man, I nailed 12%. Because stock market barely does that. I mean, that's the average, I think, over like 70 years. So let's go back to that Analyze tab. See, if I'm going to lose $1,224, right? If for some reason I don't sell and it closes below that 212, all right? So, but I'm going to get, so that's my risk. I'm risking 1224, but I'm going to gain 776. That's my gain. So check it out. 776 divided by 1224 equals 63% gain on that trade. So let's go back to the charts. I'm going to maybe make 63%. Now, if I get out half, if I sell half when it, as it's going down, because every day this trade time value, time decays, my friend. Every day that this trade goes on, because it's already above 210, it's losing time value. So maybe I can buy it back at what did I buy it? What did I buy it for? Let me see. If it's 776, I could tell you like 338. No, did I buy it for 388? Yeah, 388. I sold it for 388. So 388 divided by 2, 194. I can buy it back at 194. What did I say? I'm making like 30% on that. You can't beat that, right? And that's how I trade. So a couple positions on that. What else did I do? Facebook. Facebook has been strong. I've been talking about it all the time. You can see that resistance line I put in a couple of days ago, and I'm just watching it. The market is down today. I meant to show you. Let's jump real quick to what's going on today, because I had it on the weekly. Let's just jump to the 5 minutes real quick, and you could see how it's just gap down. It tried to recover, and then boom, somewhere around noon, the thing decides to crap out. Maybe this is the top. Maybe we're going all the way down. Nobody knows, nobody knows where it's going. Yeah, it looks like it's about right at support right now. I've got the wrong tool on there. And, here's another line. Some possible places it can go before it bounces back up, but maybe it won't bounce back up. Maybe it's just going to hang out, I don't know. But anyway, so let's go back to Facebook, because that's what the market's doing. The market's like just giving up. It's giving up. Remember, it was up 8 days in a row, at least the S&P 500. Excuse me. Let's look at the market. Oh, Facebook is finally giving up. See, before I made this video, this thing was hanging in there. It was hanging strong. And I was like, damn. It gapped up. It did everything opposite of what the market was doing. And now it's finally kind of giving back some. I don't think this is going to fully give it out. I don't know. Like I just got done saying, I don't know. Nobody knows. We can guess. All right, so my trade. What did I do? Let's look at the Analyze tab, because it's in here. I sold the 177.5 put to the 172.5 put. So basically, this thing. This is a short-term trade. It expires 18 April, right? That's about a week and a half. So if it stays above 177.5, which is kind of where it is right now, I'll make $290. If it goes below that, I make $710. I'll lose $710, excuse me. $710? Are you crazy? Oh my gosh, you're risking $710 to make $290? Well, let's do the math. Okay? $290 divided by $710. That's 40% profit. So, let's go back to the charts. If this thing, let's go to the daily. I really like the strength. Here is the 177. We got to zoom in on this a little bit. 177. It's kind of right where it is right now. This is gonna be a crappy line. Basically, if this thing can kind of jump above this in the next, hang out for next week and a half, what did I make? 260? What did I say? 260? Yeah. And I'll be like 40%. Okay, I'm not gonna let it go all the way down and lose the whole 700. I'll be out if the trade looks like it's going against me. But I do like the strength. That's the week before Facebook reports earnings. I still think it's gonna run into earnings. I really, really like this weekly chart right here. Let me back it up. I mean, I just like how it kind of jumped up, kind of held that line, made a little shelf, popped above that resistance. Maybe it's going to do it again and pop back up. So I like the way it's looking on the weekly, for sure. So anyway, back to the daily. So that's my trade, Facebook just sold some put spreads on it. I probably was a little too soon. I didn't want to be actually at the money like that, but we'll let it go. Let's see what it does. I hope you guys don't hear this lawnmower that's going on. You hear that? Oh man, quality of the video was terrible. Yeah, now they're gonna stop the mower right there. That's just great. Anyway, all right, so where are we at? What did I say? 3M. What's the name of this video? What's the name? Hold on, let's switch teams. Okay, the name of this video, CMG RUT. We gotta talk about that. CMG and RUT. All right, let's look at the CMG. That's Chipotle. Yeah, this one I did an iron condor. Yeah, that's like when you sell call spread and you sell a put spread and you try to kind of get it in the middle. So I actually have my lines right here of where I'm trying to make some money. Let me put up an hourly chart. Okay, let's bring that down like that. So basically, this line's not supposed to be here. Let's remove this one. Remove drawing. Okay, so basically I'm saying this thing, if it could stay in this little range, see this wide box, that's where I'll make money. Let's go ahead and go to the Analyze tab. I might have some more trades. No, that's what I got. So here it is. This is like iron condor. It's not quite, because you see how the legs is down, up, and kind of not all the way down. It's like a broken wing iron condor, skip strike iron condor, you know, whatever you want to call it. So basically I have more risk to the downside than to the upside, because this thing is strong. I actually had a call spread above this that I sold out of it. I lost a little money because this thing, I sold right into that train, and you kind of can't do that. So I kind of took the other side a little bit. I still don't think it's going to go all the way up, but then again, I don't think it's going to go down just yet. All right, so anyway, if this thing between 700, right? Because I sold the 700, the 680. Between 700 and this is 680. So between 700 and 740, I'll make 442. All right. Now, if it's below 680, this is in a week and a half, 18 April, I'll lose $1,558. Oh my God. I know you're saying. This is what you're saying. Oh my gosh, you're gonna lose $1,558 and just to try to make 448? Let's do the math. 448 divided by 1558 equals, that's a 28% profit. Yeah. So that's what I'm looking to make on this trade. As long as it stays anywhere between 700 and 740, I can make the max. My break evens is 744 on the upside and 695 on the downside. So let's look at the chart. 695 on the downside. That's right here, right above, right here, below that little resistance here. I'll just draw a little circle, you know, here, here, and here. So if it goes below that, I'm going to be losing. Here's the line, you know, so, and if it goes above that, I'm going to be losing. I'm just going to hope it dangles in this area just for a few days, because I'm not trying to make the whole thing. Just make a little bit of that, you know, maybe 50%. So 448, try to get it back, buy it back, and where I made $220 or something like that, right? Yeah, so I just need a few days to do that, because if you look at the Analyze tab and you see this theta, wait a minute, that's not where we are. What's the current stock price? There we are. $26. That's what it is right here. $26 a day this trade is making. Okay, just by it being on. So if you want to hang around here, you can hang around in this middle all you want. All you want, because every day I'm getting $26. It's like finding $26 on the floor. So we basically just don't want this thing to skyrocket or drop. But I'm worried about it dropping more, even though I got more risk to the downside. Maybe that's why I'm worried about it dropping more. Because look at this thing. Let's zoom out on this thing. Look at that. I mean, man. Thing is going to the moon, but it's right on that trend line holding up. I don't know why people is in this Chipotle or something, but this is, you know, drawing that trend line, it's a good way to estimate maybe you should leave the trade, right? Because you kind of come in here, and if you say, wow, man, this thing's breaking that trend, you know, maybe it goes all the way down. Maybe I consider getting out, but you know, it's going flat, up, flat, up, flat, up. These flats are consolidations. Like, so flat, up, flat, up, flat, up, flat. Hopefully it goes back up, continues along the trend line, right? So that's the trade I got on that. Last trade, RUT. I like to trade the RUT. Well, I'm starting to trade the RUT, which is the Russell 2000, the index for it, and the SPY or the SPX, which is the S&P 500 index, and the SPY is the ETF. Nice little head and shoulders pattern. It's one of the first things I look at. Here's one of the shoulders, let's draw that, here. It a lot of times it just makes me think that we could go higher, a lot higher than where we are today. I don't know if we worried about whatever we worried about, because it doesn't even matter. But this chart is looking like it wants to go higher. Now, it's not an official, because if you draw the neckline, there it is. So it's not official until it breaks that neckline. It needs to close above that neckline. Because one of the things about upside down head and shoulders, or if it breaks the neckline, if it's like a fake out, basically it can reverse hard the other way. So we're looking to this to go to the upside hard, and generally that's the distance between this neckline and the head. So somewhere, I don't know how to move that tool like that. Maybe somewhere up here, maybe new highs. That's according to this. I know you're like, wow, new highs, really? Yeah, according to this, if this thing can kind of break this neckline and go from here to here and bring that over here, that looks like about new highs. All right, so if it breaks though, if it peeks its way out, let's zoom in. If it peeks its way out right here, do I need to draw a circle? I like drawing. If it peeks its way out and then reverses, it can come down hard. It can come down just as hard as it was supposed to go up. And that's one of the things I don't like about head and shoulders. Head and shoulders. But if you recognize it, if you can recognize it, no, I'm trying to draw again. No, here we go. If you can recognize that, you can get on the other side of the trade and make some money that way, because it could do something like this right here. See that red line? I don't know why I'm pointing at the screen, because you can't see that. But look at my little finger on the screen. You see that? It could do something just like that over here. Peek out and then just kind of collapse, give it up. So it's either going to kind of hang out above that resistance, go above it, well, of course, up, down, sideways, but it's at a decision point. It's at a reflection point. So basically, I sold. Let's see. Let's go back to the Analyze tab. Is that what I got on? These are two different positions. So let's take one of these off. Let's do one at a time. So I sold the put spread. Okay, I sold the, what is that? The 145, 140. So let's go to the charts. 145, somewhere right here. This is not accurate. Oh shoot, get my line. This is not accurate. Somewhere about here, basically I'm saying in the next, I'm sorry I'm going back and forth, 9 days. Guess I like this chart. I like these short-term trades, by the way, because I want to get in and out. If it stays above there, if it stays above this line, I can make some money, and I bought the 140, whatever it was, the 145, 140 for protection. I'm not trying to get blown out, wake up and markets crash and the world is ending. So, you got to buy that protection down here, if you understand. Hopefully you can understand what I'm saying. All right, so let's go back to the Analyze tab. So basically, if it stays above that, I'm going to make, there it is, $145.50. No, 146. Right? Or I'm going to lose 854. I know you're going to say, let's do the math. Let's do the math. 146 versus 184. 146 divided by 854 is a 17% chance. 17% chance I'm going to be right. Now, if you look at the delta of my short strike, that's actually wrong. That's because it's showing 2. I think that's going to be 55.52 divided by 2. It's about 27. So I got a 27% chance. Maybe I can look at the what was that? The 145. The 145. Let's see, I'm somewhere in here. 8 days out. Here's my position. So the 145, and I bought the 140. I got 2 of them. You look at the delta, it's 32. Okay, so basically, I have a 68% chance. This is approximately of being right. of basically that thing is going to close higher than the 150. Okay, so I'm already right now. If it were to end right now, I'm right, and I get all the money, but it's not. But you know, it could go up, it can go sideways, it can come down. As long as it doesn't breach that 150, I'll be all right. So that's the trade I got on for there. And what did I say? 17% profit. So you can see, so this is what I'm saying about selling options. I sell a lot of options. I'm probably not protected. Basically, I believe in the market. I believe in it right now. I think it's a little crazy. Nobody knows what's going to go on, but I think it's going to go up. So that's what I'm thinking. So therefore, a lot of my trades are based on it's going to go up. So I'll be down here, you know, selling stuff while it goes up. And while the price is a little elevated because the VIX is a little higher today, that makes those options a little juicier, just a little bit. You know, you can see what happened. See, the last couple of days, let me bring that back. See, the last couple of days, it's been going up. So it's been down, so up, and, you know. So generally when it goes up, though, the market's going down, right? This is people buying puts. It's a measurement of that. Basically for protection, they worry about the downside, and so if it were to go down, I would lose a lot in all of those positions because all my positions are based on things going up, you know. So you have to be careful. You can, you know, if you're not paying attention, lose out. If we wake up and market's down 1,000 points, it's gonna hurt hard. It's gonna be hurting, you know. But you have to risk. You have to risk money to make money, and you know, so no risk, no reward, right? You got to risk versus reward. So thanks for everybody for watching. There's couple of you guys in here. You got any questions? Anybody want to say what's up? Yeah, and that's what I'm doing. Cat. I had a big position in Cat. Big. I sold it yesterday, thank God. Oh man, I saw this drop yesterday and it kind of recovered and I sold right into that. I was like, I didn't like this. I just thought it would continue. And sure enough, look at that drop today. Look at that drop today. Let's go to the hourly. You see that? It's kind of, I was in it from all the way back here, going up, and it's kind of flatlining. I thought it was going to take another leg up, but I saw this. And I was like, wasn't supposed to do that. See, that's what I'm saying. Nobody knows. And let's go to the 5-minute. And I got a little recovery on that. Started coming up. I was like, oh, this is all right. And I got out somewhere in here. Man, I had 15 contracts, you know, and I made pretty good money on that trade. And then boom, it goes down today. So the reason, a little fear, if you follow what's going on a little bit, so Caterpillar, big worldwide kind of market global stock, and here's 3M, this other stock I put a trade on. So, you know, what is it, Trump talking about taxing more tariffs on Europe, you know, so we got tariffs on China and some tariffs on Europe. It basically is this world of tariffs, and companies are not gonna make money with tariffs all over the place. So these companies that sell worldwide and have their feet in everything, these economy kind of stocks are getting hit, you know. So with this tariff, so if we get a trade deal. If we wake up tomorrow and they're like, trade deal, this thing is going to be up 6-7% probably. You know, same with Cat and probably the market. But then again, it'll depend on how good that trade deal is, you know. But that's what's going on. So it's a little temporary pain, and sometimes that's the best pain to sell into, you know, to sell those options. You want to sell them when people are scared. You get more money that way, you know. But it's scary. It's scary. So here's a trend line. We're looking at 3M. It's hitting it nicely. So maybe this one comes way down to here, 208. And if it does, where would it be? Somewhere right here, right? That is a buying opportunity. A buying. Don't sell it. Buy it. Buy it right there. Why? Why buy it right there? Well, I'll tell you why. Because here it went up, here it went up, here it went up. So why wouldn't it not go up there? Don't you like the chances of at least going up? And let's say you buy it and it goes down. Well, then sell it. Because, you know, just sell it. And you have this little risk there. You know, so buy it, see what it does, then sell it if it goes down. And then it'll probably trade down to the next support level, which will be probably right here, or maybe right here. Yeah, probably come down to there or there if it breaks there. So, and that's basically how you look at it. Stochastics is showing that it wants to come down even more. Now, the trade I put on, not worried about it at all. It expires in January, next January. This thing is going to report 4 quarters. You know, you just, and I'm already in the money. I'm already basically 210. You know, it needs to be above 210. So not worried about it at all. And that's why, see, I'm not a good trader. I can't do that, you know, buy, sell, buy. I need long term. I could kind of tell you, hey, looks like it's going up. That's easy. Look at it. Look, if I say from here to here, which way is it going? It's going up. You know, it's just that simple. So I'm going to assume it kind of continues to go up. And that's basically how I do. I can't really do. And I try, you know, come in here, you look at the 5-minute chart, and which way is it going? This looks like it's going sideways, all right? It looks like it actually wants to break. I'm getting better at it because, look, you're not getting higher highs, and it's just kind of hanging on that support. It's bang, 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 and eventually it's going to bust through. So it looks like it wants to go lower. It's my guess. And then when we pulled out the big picture, it does want to go lower. Oh yeah, don't even look at this. This is an excellent opportunity for a short. It looks like it does want to go there when you look at it like that, right? Come down, over, down, nice big body, and just it doesn't. There's no rebound. It's just slowly sink down and probably wants to do another leg down. But yeah, no worries. If it does come here, that trade I put on, I'll buy another one. And hopefully by January 20th, the thing goes higher. The thing is above 210. Let's pull out the monthly. Yeah, right? Is this the 210? Here's the 210. 210. Well, it's 208. There it is. Can this thing be above this line by somewhere over, wait a minute, somewhere over here, right there. Hopefully. So anyway, that's what's going on. We talked about Facebook. Amazon is one of my favorite stocks. Soon in the video, I'll show you why. Yeah, it's giving it up too. Yeah, look at that. So it seems like the temporary rally that we was having the last few days could be trying to end. You can see how I got the support line going, and if you look right there, it looks like it's trying to recover. But probably, you know, if I look at my short term, I suck at this. Probably just come up to here and then go back down. You know. But see how it's trying to recover? See that low candle, how it's like a hammer? And those at the bottom of the trend is a pretty good reversal sign. But is it going to go all the way up? Now the trend is going up, right? This is the 50 moving average, and this is the 9. Yeah, the blue is the 9, the purple is the 50. The trend is up, and it's still up. So will it recover? I don't know. It looks like it kind of came down hard, but if you look down here, not really a lot of volume coming down like that. Not a lot of volume, and the stochastics is kind of saying you might be ready to go back up. It shakes out these weak hands in there, and I'm a person with weak hands. I mean, I can't. That's why I can't do the short-term stuff. I cannot do short-term, but I do like the 2-3 week stuff. And you know, those kind of trades that I was showing you, I can't do the short stuff because I have weak hands. I'm like, oh, it's going down. You know, where do I get a chart? A box. Yeah, in here. So this is today. Let's do today and yesterday. If I draw this, right? Everybody from 1 o'clock yesterday to 2 o'clock today, that's about a whole trading day. If you bought Amazon between 1 o'clock yesterday and 2 o'clock today, you're losing money. Okay? So these are the scared people. Because as the stock starts to go up, they're going to want their money back. And then it puts that pressure on the stock to continue to go up. Because they're going to want their money back. They're going to start selling into it. Oh my gosh. Woo, I'm so glad it came back up. You know? Kind of like I did with Cat. Remember I said it came down and it came back up and I was like, oh, I'm selling. So these people are going to feel like that. And we'll see, you know, but we might catch more buyers than selling pressure. And then it can continue to go up. And then they'll start to get happy. And then, you know, off to new highs. And then the other people that didn't get in, it's going to watch it go to new highs. And then they're going to want to get. And then that's just how it just kind of keeps moving higher. You know, greed, fear, you know, all of those things. Anyway, so thanks for watching. I ain't getting no questions or anything. So thanks for watching. Appreciate all y'all in here. And hey, thumbs up. And let me know in the comments, even after the video's over, if you're driving or whatever, put it in there and tell me how you like this video. Are you learning anything from me? And I'm not the kind of person to learn from. I'm just showing you what I do. I suck. Now, I do all right. But I'm not a financial advisor. That disclaimer, everybody. I'm not any of those. I'm just a dude in a gray shirt that's trading stocks and options. Well, options. I'm not trading stocks. You know, and I'm just kind of showing you what I do. You know, if you fade me, meaning do the opposite of me, you might make some money. So, yeah, and that's what I do. I'm just looking at this pattern, almost like a head and shoulders here. But this is one of my favorite stocks. I will end it here. Yeah, that's what I wanted to show you. I think it's going higher. I think all of these stocks are going to test this high probably before, you know, that sell in May, go away thing, probably before that. And when you sell in May, it's the end of May, not the beginning of May. May 1st, don't be selling your stocks. It's the end of May is when you want to take that into effect. So let me show you this here. Let me clear all this stuff out. Follow me now. I'm gonna try to make this a little. Follow me. Okay, here we go. Watch this line. See the drop over here in March 12th last year? Comes down, up, consolidates, up. Consolidates up. Okay? Watch right here. Down, up, consolidates, up, consolidates, up. So you see that? See the similarities to this leg, to this leg? You see, they're right there. You know, it's showing you what it's kind of going to do, because this is emotions, and we all got the same emotion. It's doing the same thing, but the right side is just a little bit more exaggerated. So if the stock trades, if you can call this leg, it's a half leg, but we'll put a square. A to B, let's label this leg B to C, and then this leg will be C to D, which is this leg, the C to D, will match this A to B leg, right? So let me pull. Yeah, this drawing sucks. Let me clear it out. Let me get the trend line. So basically, from here, if we saying that's the same, right? That line will be the same as this line, right? Because this A to B is going to match C to D, and then this is B to C. Yeah, I got that. You see how that is? That big stair step? That's what I think is going to happen with Amazon. It's just looking exactly the same. It's the same thing. Look how it just leaves that 9, that blue, the 9 moving average, and it's doing it right here. It's like the same thing. So it's one of the ways you can look at charts. Look at what happened in the past. And, you know, sometimes, you know, a lot of times that works. What's going to happen in the future. Not all the time, but, you know, it gives you an idea. So let's zoom out a little bit on that so you can see what I kind of did, right? Yep. And a lot of stocks are looking at that, like we just had pulled up that RUT, which is the Russell. It's lagging, but this is a reverse This is an upside down head and shoulders. It's right there. Is this thing gonna bust through? I mean, if it is, this small cap is going to lead the market. It's been lagging. What I think is a catalyst that could bust through if the banks show good earnings. So yeah, I like that. All right, so let me end this video because this is like I did like 3 or 4 videos in this one video. Right? Anyway, so thanks for watching, everyone. That's what I'm doing. Let me know how you like this. Thumbs up, comment, share it. Share it to everybody. Just go right there, click share Twitter. Done. See, that's easy. Share Facebook. Done. Thumbs up, hit the bell. Let you know, do you like the new This Is Dre, formerly EMIP TV? Do you like this stock thing? This is, I wasn't teaching you how to make money with cameras or trucking, but boom, you can make money with this. I was showing you 20, 30, 40, 60% profits on your money, on trades that most likely will work, trades that are in your favor, that start off in your favor. So anyway, that's it. So thanks for watching. This is Dre, and I'm out.